Welcome to the first of Burton Sweets' 3 videos on the 3rd of March 2021 budget proposals. I'm Nigel Harris, a partner in the Shepton Mallet office. Please do follow the links below to the 2 other videos in this series, and also there's a link to the budget commentary on our website. If you'd like to click on the subscribe button below, you'll be able to keep an eye on future videos, and if you click on the bell, you'll receive a reminder the next time we post any more videos, which we are planning to do so on a fairly regular basis in future. I'm going to be looking at the first part of the budget proposals, which covered the coronavirus and recovery proposals. We're going to be looking at the extension to the coronavirus job retention scheme furlough grants. There was a welcome extension to the self-employed income support scheme with both a 4th and a 5th final grant. A little mention of the tax treatment of coronavirus support, which is a constant question that the tax team here get. And there was a mention of free ports in the budget, and I'm going to mention briefly what those might look like. Not terribly relevant to those of us in the Bristol area, but for those of you watching elsewhere in the UK, this might be something of interest. So some key budget announcements by Rishi Sunak on the 3rd of March. First of all, there's going to be a new recovery loan scheme. This is going to replace the C-bills and the bounce back loans. And you'll be able to get a loan of between £25,000 and £10 million, 80% of which will be guaranteed by the government. Obviously, the other 20% then is the bank's risk. And we're expecting these to be popular, although clearly not as popular as the bounce back loans, which were very easy to get. Even the 20% unguaranteed part is making the banks be very cautious in their lending, and they're clearly going to be looking at sustainable businesses that can afford the repayments. There will be some further restart grants to help with the fixed costs of businesses which pay business rates, and that's going to be up to £18,000 for the hospitality sector, gyms and personal care, and up to £6,000 for the so-called non-essential retail. Now, these grants will be paid out by the local authority to whom you pay your business rates. Unfortunately, at this stage, there don't appear to be any proposals for the equivalent support for businesses that don't pay business rates. Looking at our local authority website the other day, it appears that if you've received any of the local authority paid support in the past, they will automatically calculate, assess and pay you the restart grant. There doesn't appear to be any need to make an application for this. As of today, there doesn't appear to be any indication as to when those grants are going to be paid, unfortunately. Talking of business rates, the 100% business rate relief is going to continue until the 30th of June 2021. Hopefully by then, most of the restrictions will have been lifted. Business rates will be reduced by 2/3, 66%, from then for the rest of the 21-22 financial year. So very helpful for those, particularly high street businesses paying high business rates. There's going to be up to 250,000 matched funding to help community groups buy or take over community assets such as a village shop or a village pub, that sort of thing. These sort of community cooperatives have been very popular in the past, maybe taken a bit of a backseat in the last couple of years, particularly during lockdown. This is going to be matched funding, so you're going to have to raise a fairly substantial amount of money yourselves within the community to do this, but that could be match funding raised through charities or all sorts of housing associations, various options. And I mentioned the Freeports. I'll try not to get too excited about them, but it is a bit of a novelty. So the first big proposal was on the coronavirus job retention scheme furlough grants. These have been extended. They were due to run out on the 30th of April this year, still at a point where many businesses are still under lockdown. So these have now been extended to the 30th of September this year, which is really good news. Many businesses are hoping to be reopening June, July, so the furlough grants will continue through the summer to enable employers to ease back into full employment. They don't need to bring all their staff back to work at the same time. Employees will be paid 80% of their usual pay for the hours not that they don't work as before. The employer is going to have to pay an increasing contribution towards this. Currently, they don't have to contribute. They're then going to have to pay 10% in July and then 20% of the wages in August and September. The qualifying conditions have been slightly extended, although again, if you weren't on the payroll before the budget, you've missed the boat. But you had to be employed and have been on a real-time information PAYE submission to HM Revenue and Customs between the 20th of March 2020 and the 2nd of March 2021, the day before the budget. So provided you were paid, shall we say, in February and the submission went in by the 2nd of March, then you will qualify now, even if you hadn't been included on a previous furlough claim. There's a little summary of the figures there. Should mention that a copy of these slides is available on our website, and there's also a full set of notes and commentary on the budget as well. So if you want to press the screenshot button now or make a mental note of these, you're very welcome to do so, but the information is available on the website. Equally good news for the self-employed. Maybe not quite as generous it is for employees, as we shall see in a moment. We've got so far we've had first, second and third grants. These were based on a percentage of your average profits for the 3 tax years 2016-17 to 2018-19. There's going to be a fourth grant paid, which is to compensate you for February, March and April. It's going to be capped at £7,500. It'll be 80% of your average profits, but it's going to be based on the average of the 4 years, including 2019-20. So the 4 years, 16-17 to 19-20. Now, this is potentially good or bad news. It's now going to bring in people who were self-employed for the first time in 2019-20. They've not been able to claim this grant on the first 3 occasions. They're now included in the 4th grant and in the 5th grant. As you can see though from the description there, the calculation though of the 4th and 5th grant is going to be based on your average of 4 years rather than 3 years. And unfortunately, for those that have been self-employed for a number of years, if you had a particularly bad year in 1920, that is going to pull down your average profits. And it's quite possible that your 4th and 5th grants will be less than the previous grants. So there's some swings and roundabouts there. The 4th grant you'll be able to claim fairly soon. I don't think they're open yet, but they will be open sometime. We think in April. You'll need to claim it by the 31st of May. And then the final grant will be later in the year. We don't know anything about the final grant yet. There's some of the points I've made about the 4th grant, which we don't need to dwell on. Just bear in mind that second point though, to qualify for the self-employed grant, there's a couple of requirements here. Your trading profits must be no more than 50,000. So there is this cliff edge disqualification. If you've got trading profits of more than 50,000, you don't qualify for this at all. There's no sort of tapering off of the grant. It's an all or nothing thing. And also your self-employed income must be more than 50% of your total income. So if you've got a job or rental income or something like that, that must be in total less than your self-employed income, or again, you simply don't qualify at all. There is a slightly undefined or a less clear requirement. You must have been impacted by reduced demand due to coronavirus or be temporarily unable to trade. There doesn't appear to be any requirement for you to produce evidence at this stage. We're suspecting maybe there will be some inquiries made just to double check on this. You must also declare that you intend to continue to trade, so that if you're temporarily unable to trade because of coronavirus, there must at least be an intention to recommence the trade in the future. You're not going to be eligible if your trade has finished because of coronavirus. Now, the 5th grant is slightly more interesting. I say slightly more interesting. It has some more interesting features to it. It's going to cover the period May to September, which the the astute amongst you will have noticed, is 5 months. Unlike the furlough grant period, which seems to cover it 3-month tranches, the self-employed grant is meant to compensate you for the loss of profits over 5 months, but it's based on 3 months average trading profit. So it's not entirely generous, but it's better than nothing, I guess. Claims, they say, will be open from late July. The amount is going to be determined by how much your turnover has reduced in 2021, which is going to be a curious thing to calculate because we're only going to be claiming this in July 21. So you're not going to have much of an insight into how much your turnover has gone down. And how much it has gone down compared with what? We don't know yet. They haven't announced the calculation on that or the criteria. The other thing that's going to apply is there's going to be two levels of grants. The fifth grant is going to be worth 80% of 3 months of your average trading profits for the last 4 tax years, for those with a turnover reduction of 30% or more. So if your turnover has gone down by 30% or more compared with this unknown comparison period, then you'll get 80% of your average profits. But if your turnover's not gone down that much, you'll only get 30% of the profits. Now, I'm afraid this is a bit vague, but that currently is all we know. So there will be a fifth grant. You will be able to claim it from late July, and it will be designed to compensate you for the period May to September. Much more than that, we don't know. There will be further announcements, I'm sure. We'll publish them on the website. If they're that substantial, do look out. We may even produce another video. Another point I'd said I would mention, it may be more of an accounting point of view, but for those of you who prepare your own accounts, or for those of you who use an accountant and submit your figures to the accountant, a point to be borne in mind. The coronavirus support grants are all taxable. If you receive the grant, the rate-related grant through the local authority, if you receive the furlough grants, if you receive the self-employed income support grants, these all count as taxable income and need to be included in your accounts and on your tax return. And they follow the general accounting treatment for income. Except the self-employed income support grant, which is taxable in the year in which it's received. So you need to be careful if your accounts don't end on the 31st of March or the 5th of April. So if, for example, your accounting year ends on the 30th of April, then when you prepare your 2020 to 21 tax return, you're going to include on that your self-employed income for the year ended 30th of April 2020, but you're also going to include any of the SEISS grants received between April 2020 and April 2021. So in other words, the following year from an accounting point of view. So you've got your profits for 1920 and your SEISS grants for 2021 on the same tax return. So do make sure that you provide your accountant with that information, or you make sure you include it on your tax return. The exception here, for reasons that I haven't really worked out, is that applies unless you're in a partnership. If you're in a partnership and your self-employed income support grant is paid into the partnership bank account, then you declare it on the accounting year for the partnership, which I guess makes some sense to somebody, but I'm not sure to whom. Finally, just a point about the freeports that were announced in the budget. Contrary to maybe popular belief, we have had freeports in the past in the UK. We had them a few years ago. They weren't terribly successful and they were abolished. Freeports, though, are very common across the EU. I think at the last count there are something like 62 freeports in the EU. Most countries have a freeport. France, Spain, Italy all have several freeports, and they do seem to be particularly popular in the old Eastern European countries, Romania, Bulgaria, countries like that. So we've not got them at the moment, but they are going to be relaunched. Now, to call something a freeport is a fairly general term. The most famous and the biggest freeport in the world is probably Singapore, where the entire town and country is a freeport. We're not going to quite go to that extent. On the screen, you've got the towns, cities that were announced, and you can see apart from East Midlands Airport, these are all coastal locations because we're talking generally about goods coming in from overseas to be processed, distributed, or whatever. For those of us in the southwest, we'll be keeping an eye on Plymouth and South Devon, and also Solent, which I imagine will cover Southampton and Portsmouth. So what are the proposals? What are Freeports for? Well, at the moment, it looks like they're going to be very similar to enterprise zones. There's going to be higher tax allowances for structures and buildings. So where you're putting up commercial industrial buildings, there's going to be some higher rates of tax relief. There is going to be some 100% enhanced capital allowances available for plant. So at the moment, we've got the annual investment allowance, which has an annual limit. Now, we do have the new super deduction, which we'll be talking about in another video. But otherwise, there is a limit each year to how much you can claim capital allowances on. In the Freeports, there's going to be a free-for-all, basically. You can spend as much as you like and get 100% tax relief on investment in plant and machinery, commercial vehicles, that sort of thing. So that could be quite attractive if you're looking at setting up a substantial business with a lot of investment. There's going to be exemption from stamp duty land tax where you're buying commercial property in a Freeport before 2026. There's going to be an exemption on employers' national insurance contributions where you're employing new employees in a Freeport. What we're not going to see, as far as we know, is blanket tax exemptions. So we won't have a situation that you have in some Freeports across the world where these are kind of mini tax havens where nobody pays tax and there's no VAT and that sort of thing. What I think we might see is some sort of VAT or customs duty deferral where goods come in from overseas into the Freeport. You won't immediately have to pay duty or VAT until those goods are sent on into the mainland from the port. And it may well be that you can avoid all the duties and that if the goods are processed within the Freeport and then re-exported elsewhere in the world. We'll have to wait and see on the announcements for that. For businesses who import and process goods from overseas, this might well be attractive. It might well be an incentive to relocate at least part of your business into one of the Freeports. They're not going to be huge. They are very geographically defined, and one can imagine that even as we speak, land values have skyrocketed in those areas. So it may even be that most businesses have missed the boat to get established in one of these Freeports. It may, on the other hand, be that the tax incentives are not really that great for many businesses, and it will be just the domain of one or two specialist businesses. I'm Nigel Harris. Thank you for taking time to listen to this presentation. Do email me with any questions you've got afterwards. You're very welcome to do that. And do look out for the other videos in this series. Thank you.